All right, bro. So I'm about to go over the strategy now. So literally, just to give the mentality before everything, we get all of our trades that we take in our account that we're trying to compound from the Harmonic Scanner. Okay. And then what we are doing to confirm if we should get in the scans that it's giving us, which are going to appear on this side here, because we don't get in every scan, but we're only going to take scans that are on the H1, meaning the hour time frame, the ones that appear here. And we're not going to take every scan that comes out. We have literally a set of rules to determine if we should actually get into the scan. Okay. And those rules are going to be number one, is it trending? Number two, is there fib commonality? And I'm going to explain to you what that is. And then number three, is there structure in that area, AKA support and or resistance? So I'm going to start off with the first thing. So number one would be, are we trending? So I'll just show you what that looks like. And you know what that looks like since you've been through the academy. A trend simply is just the market moving in one direction. What overall direction is it moving in? Because what's going to happen is the scan is going to call out a buy, which is when the D point is here and the idea goals are above. And why is that a buy? Because if it's telling us to enter at this green line here, then that means, and the idea goals are above and our stop loss is below, it means that it's telling us to buy it. And then we should be exiting if it ends up dropping any lower, but we should be buying it, and these should be our targets here. Okay. And I'll show you what a sell looks like too. Let me see. This one is a sell. This is a sell because, again, the green line where the D point is around this area, that is telling us the idea goals are lower. So once the market comes here, we want to see the market drop, right? So that means that this is a sell and our stop loss is above. So that's what a sell and a buy is. So the first thing is we want to make sure, is the market trending with, is the trend correlating to what it's telling us to do, what the scanner is telling us to do? If the scanner is telling us to buy, we want to see the market in an uptrend. Okay. So I don't even feel like I need to write that down. Literally, if the scanner is in a buy, if the scanner is telling us to buy, then we're going to be looking for an uptrend. I want to see us in an uptrend. If the scanner is telling us to sell, like how it is here, then I want to see us in a downtrend. You want us to be you want the market to be in a downtrend. Okay. So that's very simple. The next thing, which is a little bit more complicated, and you could talk, and I want you to genuinely like talk to me with this, like for real. Um,
All right,
you learned about the Fibonacci, correct?
I did.
Yeah. So what I'm going to do is I'm going to go over it in a little bit more detail just so you can understand. So what the Fibonacci does, as you learned, is when we are in a uptrend, I'll do it like this. When we are in an uptrend, like this, what we want to see is we're going to measure the low point here and then a high point. This is where we put our fib, okay, which is short for Fibonacci. We started, right. If we're in an uptrend and we're looking for a buy, we fib from low to high. I didn't even mean for that to rhyme, but that's honestly a good way to remember it. If we're in an uptrend and we're looking for a buy, we fib from low to high.
That makes sense.
All right.
Yep.
So let's say I'm fibbing from low here, high here. These are the three key points. Well, there's there's 4 key points actually. These are the 4 key points that we are going to be looking for the market to be retracing to or pulling back to. Okay. And it's going to be the 382, the 0.5, the 618, and the 786. And later on, I'll explain the significance of this, but the most important thing to understand is these are the levels that we're looking at. And these are the zones that we're looking at. So when the market is retracing into these zones, that is a key indicator that it's going to go in the trending direction from that point. Now, let me show this for the sell, and then I'll explain what fib commonality is. So this one isn't going to rhyme, but if we're in a downtrend and we're looking for a sell, we're going to fib from high to low. So this would be our high point, and this would be our low point. So I'm going to start the fib up here, and I'm going to pull it down here. And I'm going to be looking for it to come into these key areas. Okay. So in this case, it came into this area, and then it's going to be continuing into its trend. So just to reiterate, when we are in an uptrend, we want to see when we are in an uptrend and we're looking for a buy, we want to fib from low to high. When we are in a downtrend and we're looking for a sell, we want to fib from high to low. Now, I'll explain what fib commonality is. The excellent thing, which is actually cool, and why I really do love this concept, when you're looking for an entry at more than one, when you're looking for an entry at a specific place, what you can actually do here is you can use multiple fibs at that one location, and I'll explain this. So let's say what we want to do is this is what the market is. This is what the market is looking at. I don't want to draw this out. Let's see. This is fine. Okay. So let's say that we are looking to enter here. Okay. This is where a scan came out. Okay. The scan came out here, and it's telling us, hey, this may be an area that you want to buy. You should look at this. Okay. We're in an uptrend. So when we're in an uptrend and we're looking for a buy, we want to fib from low to high. So what you can actually do is you can fib from multiple low points. So this is a low point here, and I'll make this a different color. So this is a low point, this is a high. So what we can actually do is we can fib from low to high here, low to high here, and then also low to high here. And when all of these points have Fibonacci areas that are lining up at the same spot, we call that fib commonality. So I'll show you what I mean now. So let's say we have from here and we pull it up. Okay, we see that it's in between the 382 and the 50. It's in this zone. So what I could do is, I'm just going to mark it. I'm just going to mark, hey, that it's in this zone like this, just do a little marker like that. It's in that zone. Now what I can also do is I can pull this down and I can fib from this low now to this high here. And what do I
question?
Yes.
So that zone, what does it mean though?
So what that zone means is it's representing this low point, this low, and this high, this fib, it retraced into this zone. So it's in between the 382 and the 0.5. It represents that this is a key zone. This is a key area because it's in between two key fib levels. Okay. So this is a likely point where the market will go in our direction. Now to stack a confirmation on top of this, so we're not just using this one area, we can now use this low and see, okay, is there a fib point that's near here too? And there is, because the 382 from this zone, from this low to high, okay, this low to high here, it's right there. So what I could do from there is, I could just draw a line and just keep that in my head that, okay, we have, it's in the zone here, but then it's also here. And then if I drag all the way here, there isn't anything here. But a lot of the times you're going to notice that it keeps coming to these key levels, even if it's at multiple low points or multiple high points. And let me just I'll just do the opposite now. And I'll give examples too, just so it makes sense. But let's say, again, we have this market moving. Okay. Now, again, we want to take it from, this is our low point, because when we're in a downtrend and we're looking for a sell, we fib from high to low. So here is our low point. Okay, this is our low. These are our highs. So these are where we're going to be fibbing from. These are where we will be placing our fib. So if I start my fib here and I move it down here, let's say, I'm just going to move this here just for example. Okay, it came to the 382. This is something that I can mark. Boom. Okay, let's try this low now and let's see what we get. Okay, I see it's in the zone now between the 50 and the 382, still around this area. That's something else to keep in mind. And then here, we see it came to the 618, right at that line. So we have multiple confirmations from multiple areas that this is a good location to be entering at. Does the concept make sense?
Yeah, it makes sense.
Okay. Now, the last thing that we use before I go into some examples in the actual market now is structure, aka support and resistance. And all that means is I want to make sure that wherever we're entering, we have support and resistance at that location. And we know what that is. If I do this, let's say the market is something like this. Okay. And it's telling us we get a scan that says we want to enter here. Boom, boom. All I want to do is make sure that there's support or resistance at that level. And because I'm not specifically talking about either one, you call it structure. Does that make sense?
Yeah, it does.
Okay. So in this case, the market is in an uptrend. Okay. Let's assume that we have our fib. Well, we could fib this just to see. But the most important thing to illustrate the third confirmation, the third steps to confirming a harmonic scan is that there's structure. This is at a support area. Okay. That used to be resistance. The market pulled down and it's at this area. So typically, what's going to happen is you're going to have your fib point match up, and it may be in a zone. Sometimes it's not going to be on the dot. And then as you move it, you will see that there are other areas that are lining up in this area plus structure. And when we have all those things together, we take our trade. And these are the rules for taking a trade. You typically don't want to have a stop loss larger than 30 pips. Your stop loss shouldn't go more than 30 pips. I would do 35, maybe 40 pips maximum. Typically, my stop losses are between 20 and 30 pips. And we are always putting the TP1, the TP2, and the TP3 that the harmonic scanner gives us into our MetaTrader 4. And when TP1 hits, we are moving the rest of the entries to break even, maybe a little bit in profit. When TP2 hits, we're moving our stop loss into a little bit more profit. And then obviously when TP3 hits, all of our trades won. So, and that's how it goes. So now I'm going to bring in these live examples. Well, not live because the market's not live right now. It's currently a Saturday. But I'm going to bring in these real market examples and explain how I would break this down. So again, confirmations, trend, fib commonality, and then structure, aka support and resistance. So the examples that I saw, we're going to start off with EJ, and these are trades that won this week. All right, these are trades that won literally this week. I wasn't able to get into all of them, but these are trades that won this week. I did get into EN, but EJ and USD Chef I was not able to get into, but I'm going to explain them regardless because I would have gotten in them if I could have. So EJ is Euro JPY. And we can already see this trade won, but why did it win? And why would I have entered this? We can kind of see already. So what I like to do is I like to recalibrate myself. I press this reset chart button here. And because there's other things on this chart that doesn't allow you to get a full view of it, that's why I use Trading View and I actually go to the chart itself so we could get a fuller view just to make sure that what I'm seeing is what I'm seeing. So Euro JPY, what is our first step? And let me actually copy and paste our steps so we can take them with us as we look at this. So
first step is to find the trend, right?
Absolutely. First step is to find the trend. Was to ask ourselves, is it in a trend that matches what the scan is calling out? So this scan is calling out a buy, right?
Right.
It's calling out a buy. And when we're looking for a buy, we need to be in an uptrend. So when I hit reset chart and I look at mostly what's going on here or what's recently been going on.
Wait, I'm sorry though. You said calling out a buy?
Yes. Like
what exactly?
This is the signal that it's providing because what these are going to do right now. Okay.
Because it's in an uptrend.
So it's not calling. So sometimes it'll call out buys even when the market's in a downtrend. The Harmonic Scanner is just a pattern recognition tool. So what it's doing is it's literally saying that I see a mathematical pattern that typically goes in a direction that we say it's going to go into whenever we see this lining up. But to literally maximize my accuracy, I just trade with the trend because we're trying to compound our account and we don't want to be taking additional risk when we're trying to grow this money long-term for freedom. So I trade with the trend because trading with the trend is the safest thing to do no matter what market you trade in. So that's why we trade with the trend. So literally we can see what's happening now is, I just want to make sure I do have this saved because what I like to do is once I kind of calibrate myself and I see what's going on, I will delete it and just look at what's going on. And we can see obviously here that we are most certainly in an uptrend. It's pretty clear to see.
Yep.
So, and I'll just draw a little trend line, but we're definitely in an uptrend here. Now, where that green line came out was about this area here. Okay. This is where it was telling us to enter. As the market was moving, it was telling us to enter around this area. Okay. So seeing that we're in this uptrend, this is what I will do. I will draw a horizontal line. So you could come up here and you could do the horizontal line, or depending on the device that you have, it has what the shortcut would be right here. Instead of coming up here to click that. Wherever the market was at, which is around this zone here pretty much, I'll draw like a horizontal line or I'll draw a circle like that just so I know when I start to place my fib, I know what I'm looking for now. So let's bring our steps back. Number one is checked off. We know we're in a trend. Okay, number two is fib commonality. I want to see multiple fib points that are confirming that this is a good location to enter. So when we are looking for a buy, we fib from low to high. So these are our low points. Okay. And this low point is kind of similar to this one, but it's still a low point. So I just want to change the color of this. Can I change the color? Good. I'll make it blue because we're buying. So these are our low points. These are all low points. Because we learned in the IM Center how to identify a trend, we learned about our highs and our lows. So these are our low points here, all low points. And we don't have to use a fib on every single one, but I like to see at least 2 to 3 commonality points, at least 2 to 3. So I could start from fibbing from low to high. So if I
Can you
fib,
just remind me what commonality points means again?
so commonality is when when we are fibbing from our low to high, it means that multiple of the key fib levels, the 382, the 50, the 618, they're lining up around this zone. So I'll literally show you right now. So when I fib from this low here, the high would be right here where my mouse is, because that's where that wick is. So then all I'm doing is I'm just stretching it out now. And I'm stretching it out so I can see as these lines stretch out, where is it lining up at? And what we can see is the 786 here, this blue line or this turquoise line, it definitely is in this area right there. Okay. And the 618 is kind of in that area also, but I don't feel like we don't really need to look at that. This is definitely more potent. Okay. So that's one. It's not fib commonality yet because it's just 1 point. So it's not fib commonality. You need at least 2 points or more. So now I'm going to do this next low. And because this low is here, its high would be here instead. Okay. So it's right up here. Now I'm going to stretch this line out because I want to see if when I stretch the line out, is it matching up with this area? And what do we see? I see the 50 right here. You can ignore these extra numbers. As a matter of fact, I'm going to delete it just for clarity. Prices. They're just the prices. So you can see that the 50, it's lining up right at this location too. So that can be another horizontal line that we draw. Now we have some commonality. Okay. So we just did this one and this one. So I'll just put a check mark next to it just so we can kind of keep that in our head that, okay, these are good. Actually, I'm not going to do that. It's kind of big and it's extra, no need. But here. So now we're going to do this low to this high here. Then we're going to stretch it out to see, do we have anything lining up? So what I'm seeing here is we have a 382. We have our 382 level, and it's right underneath the body of the red and the blue candle that it was telling us to enter on. So now we really have some commonality because essentially it's telling us this zone would be a good place to enter at. This is what the fib commonality is telling us. Now I can move this low even lower here to see if there's more. Okay, and what do we have here again? We have that 382 right there. So we have really strong fib commonality. We have 4 key fib levels that are around the same area. That's very strong. And then if we check here, it's a little bit lower, but it's still here. And then this is basically the same location right here. And it's not really, there's no real fib level here. But essentially, we have 1, 2, 3, 4, 5 key fib levels all at this same location. Okay. So fib commonality is definitely a check. And the last thing is structure, aka support and resistance. So we know exactly what support and resistance is, and this is going to make it easy. So what I'm going to do is I'm going to draw a box in the area that we just confirmed that there's good fib commonality. And I'm going to delete all these little extra lines. So do you understand that we confirmed that there's fib commonality in this area? There's a lot of key fib levels that are inside of this area, correct?
Correct.
All right. So I'm going to delete these extra lines that are here because we don't need the lines here anymore. We already know that we have it. We already know that we're good. So now what are we going to be looking for? Structure, aka support and resistance. So the first thing I would say, I'm going to delete this too, because we already know that we're in a trend, and we already know from these lows that the market went up. So the first thing I'm just going to highlight is, as a matter of fact, let me do it like this. I'm just going to highlight the spots where I am seeing the market is responding to. So here, look, right there, that's support. I can't make this any smaller. I should be able to make this smaller. There we go. Right there, that's support. This is a level of support. The market came down here and it bounced down there. Again, support. The market came down and it bounced up, came down and it bounced up. Okay, what about here? Definitely right here. This is resistance because the market came up here and it bounced down here. So automatically right here, we have 3 spots. And if we were to go to the left, look at this. We have another spot.
Oh, wow.
Exactly. Resistance. So you see how it matches up. And then if we stretch this out even more, look at that. What's that? Resistance. It kind of went through here. That's okay. Sometimes it's going to do that. But for the most part, this is good structure. This is good structure. And I don't have to keep going, but we can see even, over here, we have great structure in this location. We have great structure in this location. So because we've combined trend, fib commonality, and structure, I'm going to take a buy in this location as the market is moving into this area. So as the market was moving into this area, you could have bought anywhere in this area. If you would have bought right up here, you would have gotten a drawdown maybe 17 pips, but then the market went up for 99 pips, nearly 100 pips. It's a bad. And then what I like to do most of the time is, if you're patient, I like to enter like at least in the middle of the box. I feel like that's the best place to enter, at least in the middle. Sometimes it comes like down to the bottom of it. But if the market starts to move past this box, like strongly too, then we don't even enter the trade. So I like to see it reject like that. I like to see these wicks, because when you see wicks, that's an identification that the market doesn't want to be there. Okay. So literally what we do is, this is just a long position tool. It's just telling us what our position would be. So what we're going to do is 30 pips stop. That's what our stop level is going to be at. And then what I'm actually going to do is I'm going to bring back these lines so that we can see what our TP would be. So TP1 would be, depending on where you entered at, there's a lot of lines here. Let me just clear this up. But depending on where you entered, like if I enter maybe a little bit lower, then TP1 could be about maybe 24, 25 pips. So, okay, here's something too. If I see that TP1 is like 24, 25 pips, then I'm not going to risk more than I would make. I'm not going to risk 30 pips. I would risk 25 pips or less. My TP1 is always going to be a 1-to-1 ratio or better. And then we could see here, this one would have been for 43. And then I moved that one up by accident. And then we would have seen that this one would have been for 73 pips. So the market overall went higher, but I like to use these TP points because a lot of the times the market will actually use these points as support and resistance too. So the market could come up here and it could reject it, and then come up here and reject it, or come up here and reject it. So you don't want to be just trying to hold it as long as possible because, again, we're trying to compound our account and grow our account. So this is proper risk as well. But that's what I do, and that's the strategy. And that was me going through it very slowly. I'll go through this next example kind of fast, or just normal speed. So the next one is, I'll do EN. This is one that I did enter. And this one dropped like crazy. This was a good, and this is perfect. This is for the sell. So I'll do this one a little bit faster just to show you like how the real motion of it is. So let's say I come to the scan, I reset my chart and I just look back and, oh yeah, we're definitely in a downtrend. That's clear. That's very clear that we're in a downtrend. So what's the next thing for me to do? Okay, well, let me just clear up my chart so it's very clear. I saw that the buying point was up here approximately. I mean, the selling point, it was up here about. So from this point is where I'm going to start looking for points to fib from. Because when we're in a sell, when we're looking for a sell, we want to fib from high to low in a downtrend. All right. So this is an equal high because it's the same place as here. So I'm not going to mark that, but this is higher. So we can fib from here. We can see what this fib is about. And we don't need to fib every single high, but just a couple of them just to get an idea of what's going on and see if we do have, some spots. We don't need to fib every single high. That's not necessary. I want to see the highs that are closest to it have some kind of commonality. So if I fib from here and I go about here, okay, and the reason why I'm stopping at this low here is because when the market was up here, this didn't exist yet. This drop didn't happen yet. So this right now is the lowest point that it's been to. So this is where we're going to be fibbing from. And what I can see is the 786. I see that there's a little bit of there's a fib point right there. So I'm going to measure that and see what's good. Okay. I also see the 786 is here as well. So now we have a zone. Okay. Let's look up here. I see we have a 618 in this zone right here. So that's already 3 fib commonality points. Okay, what about up here? It's a little bit hard to see. But you see that green line is a green line right there. That's another fib commonality point. And I'm not going to go through all of this, but that's literally another zone right there. So again, what do? Well, we have our zone. So all I do is I stretch this out. We have our zone. And you can already see the structure. You can see the structure already, but I'm going to point it out. Boom. We have structure there. Boom. We have structure here and multiple points came up, came up, came up, and then dropped. Multiple points, there's structure. Boom, structure again. Boom, structure again. So we have 4 separate points of structure. All right. And now what am I going to do? Well, let's get our TPs out so we can see where it would be. So from this area, approximately this area, all right, 30 pips is here. That would be our stop loss. And then here would be 30 pips, maybe even 40 pips. And just to make sure this is clear, we don't count that little number. We don't count the third number. All right. We don't count the last digit. So it's 40. That's 40. All right.
Yeah.
So it's wherever you want to count, wherever you would have entered this at, as long as it's in this zone. This trade dropped 46, 77, 127. Cumulatively, that's like maybe 250 pips. And that's what this strategy does. So what really happened when I was in this trade, you could kind of see it, is when TP1 hit, we had this candle that shot all the way up here and I got stopped out in profit. And then it proceeded to go down. Sometimes that's going to happen, but I would much rather get stopped out in profit than the market actually reversed on me. That's what I mean when I say these levels can sometimes do that. But essentially, bro, that's the strategy.
Bet. Freedom right there.
Absolutely.